All right, now we want to get into our big interview this morning. Now, Treasury Cabinet Secretary Henry Rotich recently gave the strongest indication yet that he intends to repeal the interest rate controls that were effected in September 2016, meaning the cost of borrowing will go up. CS Rotich said the decision, which he says will boost banks' profitability in the coming months, is meant to support economic growth by reviving lending to the private sector. That's the topic we want to get to at this moment. And let me begin by introducing my guests in studio. I'll start from the far right there. We have Honorable Kimani Ichung'wah, the Member of Parliament for Kikuyu. Welcome to the program.
Thank you. Right
next to him, we have Habil Olaka, the CEO of Kenya Bankers Association. Karibu sana.
Thank you.
We have Joram Winamo, who is the Managing Director of a Wild Consulting Firm. Welcome as well.
Thank you.
And right here next to me, Maurice Odwor, Investment Manager with Saiton Investments. Karibu sana.
Thank you.
Honorable Ichung'wah, I'll start with you because at some point I will need to let you go and understand from you in terms of the parliamentary process of repealing the cap on interest rates. Just walk us through that just for understanding and link us from what the CS said to what is actually going on right now.
Thank you, Wahiga. And first, of course, I take great exception to the statement that the CS intends to repeal the law. He has no such powers. It's only Parliament under the Constitution, I think is Article 119, that gives Parliament powers as the only body legally mandated to legislate on behalf of the people of Kenya. Therefore, all that Rotich can do is make a proposal.
Make a proposal.
To the House, which the House will then consider in plenary and in the Committee of Finance. And if the House agrees with him, then repeal the Act or the section of the Act, Banking Act, that he intends to repeal. But I can tell you, Wahiga, even from his reading of that statement in the House during his budget highlights a few weeks ago, there was definitely open resistance to it for obvious reasons. And I'll tell you, this is one house, the 12th Parliament, is turning out to be one house that is extremely protective of consumers and the people that we represent. And therefore, as much as we may want to strike a balance, we must be caution everybody, be it from the National Treasury and the industry. I was just having a discussion with my friend, good friend here, Habil. We've come a long way, and I think there were reasons why we felt as a House and the Kenyan people felt through their representatives that there was need to cap interest rates in this country. There is a case for review.
Okay.
But there is absolutely no case for removal of the cap.
Okay.
We could review, and I have said before, and I still maintain that position at a personal level, that there is a very strong case for review. But it has to be a negotiated position because at the end of the day, we should not even be left imagining that the industry can blackmail us or blackmail the country.
That's what you see is happening.
That is exactly what they have done.
Okay. I think it's only appropriate that Habil comes in now. I'll give you a chance to make your opening statement. If you want to respond to anything that Honorable Ichung'wah has said, feel free to do so as well.
Yeah, I mean, I think it's not in doubt of the fact that the intentions of the law were good, because at that point in time, the concern in the market was that the rates were high, and indeed the rates were high. And the law, therefore, was put in place, one, to try to bring down the rates of lending, and then two was also to boost the savings, because there's one aspect of it where there was an incentive being given to savers to be able to boost our savings culture. So it was twofold. But I think what we did not quite come to terms with, and with the parliamentarians at that point in time, was the solution. The problem was quite clear. It was all agreed that indeed is a concern. Costs were high, but I think the solution that was finally decided by Parliament was where we disagreed with. We thought, rather than using a sledgehammer to address the problem, there were possibly better alternatives that could have worked in a way that the rates come down sustainably. And moving forward, we have had this law now for just a little bit below 2 years. The impact of the law, I think a number of entities have come up with surveys and output papers trying to show the impact of the law. IMF has done that, the World Bank has done that, the Central Bank has done that, the National Treasury, KBA has also done the same. And I think it all points to one thing, that the intentions of the law are not being achieved. And so it just...
Is it because of the way the law is being implemented? I mean, so do the surveys show why? Not just the result, but why that particular result?
Well, the survey will show the outcome.
Okay.
For example, the issue was that, the rates should come down. So have the rates come down? And has access been boosted? In other words, are the consumers who are intended to be benefiting from the law, are they actually accessing the loans at that reduced rate?
Okay.
On the other hand, the savings culture, has it improved from where it was before the law was passed to currently? And the results on both ends show clearly that it's not being achieved.
Fair enough.
And therefore, now it actually behoves us as the stakeholders to now think about what do we do. One alternative, of course, is to repeal the law, but then put in safeguards to ensure that the concerns that the market has, and Mheshimiwa has clearly indicated that of the fact that the fear that there is in the market currently is that if we repeal the law, will we go back to those high rates? You see, and I think that we are proposing proposals that are being put to the table in terms of putting safeguards in place to ensure that when the law is repealed, we do not go back to the olden days when the rates.
So you're leaning more towards repeal than review, and I want a yes or no answer.
Yes, repeal, and then put the safeguards in place.
And put safeguards in place.
And I think we are quite aligned with Mheshimiwa. Mheshimiwa is not saying that no repeal.
Okay.
What he's saying is that yes, we can review, which means we can repeal, but let's ensure that you have got safeguards in place to ensure that we don't go back to where we were.
Thank you, Joram Kamin. And I know you have some research as well on the effect of the...
We had actually done a survey around formal SMEs and the whole question of lending. And the last time I was here, we were actually discussing the output of that. And I think there's a Swahili saying that, when two big animals fight, the people who end up suffering is the grass in between. And in the survey that we actually did, it turned out that a lot of formal SMEs had actually reduced access to credit. In fact, out of all the people we surveyed, only out of 100%, 70% could not access credit within that year. And I think, if we bring in a multifaceted approach to this, all the banks ended up just lending to one big client, which is the government. And because the SMEs are viewed as being risky to lend to, yes, the interest rates came down, but the access was locked. So the question was, do people need cheaper rates, or do they just need... In fact, there's an industry that has really mushroomed, which is the informal lending side.
In fact, I was going to come to you.
The mobile lending side, which the rates are a lot higher, but you still find these people running out of money. So do people really need cheap credit or no credit at all? So I think the intentions of Parliament were good in, capping it so that the rates can be cheaper. But I don't know if, as they are both saying, I don't know if it's actually achieved the intended effect, because what ended up happening is banks stopped lending to SMEs because we were viewed as being too risky. The pricing, of the loans could not factor in for that risk. So what we saw from the end of the SMEs themselves, that everyone was saying, banks are asking for too much to be able to continue lending, too much of, collateral. And at the end of the day, people ended up not accessing that credit, and business slowed down as a result.
Fair enough. Yeah. Maurice, come in.
I think if you look at what is coming out clearly, that the intention of this law was to spur credit accessibility, and also in terms of credit pricing, that at least Kenyans could run their business, create jobs, and promote economic growth. But so far what we've seen, one, a survey that have been done, we've seen decrease in terms of number of loan application, which means most Kenyans nowadays are being locked out from getting financing from banks. We've also seen increase in terms of the loan size itself, an indication that if banks are now loaning to more big corporate as opposed to individuals. And if you look at Kenyan economy as it is, the backbone of Kenyan economy is SMEs that usually drive the economic growth. And also we've seen decrease in terms of the loan term, which means now banks are loaning more short term, as in they become now more risk averse in terms of that. But if you put all these things into totality, a free functioning market is good for efficient allocation of resources, but in most instances, government usually step in to ensure that at least consumer is protected. So what needs to be done for this law is to a repeal, so that at least it gives leeway in terms of pricing in risk. But at the end of the day, again, consumer needs to be protected, so that Kenyans can access a loan that's easily accessible to spur economic growth. Okay,
so I'm hearing two repeals, one review. Joram, I don't know where you ended.
I think I would go for the repeal because,
Oh, wow. Okay.
Because, if you can't access it at the end of the day, if you can't access the 14.5% because a bank views you as risky,
yes,
it means you have no capital to grow your business. So a lot of the people would say, okay, 22%, 18.5 was a lot, but at least we were getting money that could keep our businesses going.
Honorable Ishugo, let me come to you. Let me read your quote by your colleague, Honorable Jude Njomo. He was quoted as saying that in the past, credit was always available, but not affordable. Today, credit is affordable, but not available. Even as you respond, just give us your views. Why do you think?
That's what I was calling blackmail. Because it's not really that the industry has not had money to lend to SMEs. They have had the money. But because, as Habil says here, and I don't want to accuse Habil because he's my very good friend, we went to the same school a few years apart.
Thank you for declaring that.
so I know he's an honest man. But the industry that he's working for tends to be very dishonest and insincere with Kenyans. I'll tell you.
I hope you justify with, when you come on TV and accuse the whole industry of.
And I'll say that in the presence of Habil here, because we engaged before we passed the capping law 2 years ago. And one of the proposals they had come up with was one to create a fund, an SME fund that would be able to offer affordable credit to SMEs at concessionary interest rates. But what they came up with was what they call an MOU. And I challenged them, as I still challenge them today. Why not allow Parliament then to legislate and anchor this SME fund into law? Because when you tell us that what you want to have is an MOU between the industry and CBK, as a people's representatives, if you don't honor the MOU, so what? So we told them, let us legislate this MOU, let us anchor it into law, that you create a fund and say probably something like 15 to 20% of your total global loan book will go to SMEs at concessionary interest rates.
In a sense, you put that funds apart.
I said and I still maintain, even then, it wasn't necessary to cap. Capping would only work as a short-term measure. In the medium to long term, I agree with Minamo here that you need to allow free market economy. However, when you're dealing with an industry that is so dishonest, that for them their profit motivation overrides everything else. What I hear from everybody, IMF, the Banking Association, Central Bank, is this analysis that they have done. But who has done this analysis? The same industry players. Two, it is not true that it's only in this country that credit access to SMEs has gone down. In the entire region, East and Central Africa, credit to SMEs has gone down. Has there been capping in Uganda, Burundi, Tanzania, Rwanda? No.